Bryan Gaiser is an investment advisor representative of Advisory Alpha LLC, an SEC-registered investment advisor. All opinions expressed by Bryan Gaiser are solely his own opinions and do not reflect the opinions of Advisory Alpha. This recording is for informational purposes only and should not be relied upon for investment decisions. Investment advisory and financial planning services offered through Advisory Alpha LLC, a registered investment advisor. Insurance, coaching, and educational services offered through Gaiser Financial Group. Gaiser Financial Group is a separate and unaffiliated entity of Advisory Alpha LLC. While tax and legal services may be discussed in the general course of financial and investment planning, Advisory Alpha does not provide tax or legal services. Please consult with your tax or legal professional prior to making decisions related to these issues. This material is not endorsed or approved by the Social Security Office or any other government agency. An annuity is a long-term financial product designed largely for asset accumulation and retirement needs. All guarantees are backed by the claims-paying ability of the issuing insurance company. All opinions expressed by externally cited sources are solely their own opinions and do not reflect the opinions of Advisory Alpha. This is for informational purposes only and should not be relied upon for investment decisions. The case studies presented reflects the specific circumstances of one client and should not be considered a guarantee that another client or potential client may experience the same or certain level of results. This is for informational purposes only and should not be construed as investment recommendations or solicitation. Names have been changed to protect the anonymity of clients and are not testimonials in nature. Learn, grow, and take charge of your retirement. This is the Wealth Through Wisdom podcast with financial advisor Bryan Gaiser, founder of Gaiser Financial Group.
So it wasn't too long ago, Berkshire Hathaway held their annual meeting, and for the first time in 60 years, retired CEO Warren Buffett, he was not on stage delivering all the information and news, Brian, but he did watch from the audience. And I have to imagine for the people that were on stage, it's a little bit of an intimidating intimidating gaze upon you. I don't know that I would want that pressure. CNBC later asked Warren Buffett how he sees the stock market right now. And this is what he said.
I've compared the markets to a church with a casino attached, and people can move between the church and casino. And I would say there are more people in the church and more people in the casino. But the casino's gotten very attractive to people. It's gambling, just totally. So we've never had people in a more gambling mood than now. But that doesn't mean that investing is terrible.
And that was Warren Buffett talking recently about how he views the stock market, the church and casino analogy. Brian, are you seeing similar things? Does the market mood feel a little bit more like gambling right now?
It does to a point. We don't know it, but biologically we're addicted to that high when things go really well. Oh, I called this stock, or I called this whatever it may be. I knew this was going up. I knew technology was going to be number one. I knew NVIDIA, whatever companies out there. And I'm not recommending any company. I'm just using that as an example. Everybody like say, I got in there in 2010, and I actually know one person that really did.
Right.
And the point is, I knew one person that did. He passed, but his wife has those funds now and he did well.
Okay.
But the point being is, it is like that. But see, you can't get no bigger rush than when things run up. There's no way to get that feeling, but also you got to risk getting knocked to your knees.
That's right.
Mm-hmm. But if you can't get knocked to your knees and come back, there's no greater high. There's no greater. So emotionally is why people go to the casino.
Yep.
Church is safe, and I'm all for church. Don't misunderstand me. It's the number one thing in my life. But the point is, it really boils down to just dealing with your emotions. Don't invest via emotion. You got to take emotion out. So you got to have investments. And then what we're talking about when we're talking about the casino is speculation. It's like we talked about it before this show. Just got back from the Bahamas. Mm-hmm. One card, one jack of spades away from like a $200 and some $1,000 pot.
Yep.
I play Ultimate Texas Hold'em from time to time when I go, and just for enjoyment.
Yeah, of course. That
energy I got from, oh my gosh, here we go.
The adrenaline
and then
rush.
It wasn't. There's an excitement to that. And they say even in casinos, people like to get almost a winner and lose because it doesn't take away their joy and they got to keep trying again. Mm-hmm. But when they win, there's almost a depression that comes from it. So you got to be careful. You got to take emotion out of investing. That's what I'm hearing from him. You can play the casino some. You just don't want too much of your money in casino. It reminds me of a gentleman that came in and he had no idea what his assets were in. He had been saving and saving and saving. We did an analysis of his portfolio, 80, 90%. It was pretty much in the same investments through mutual funds.
Got it.
I said, do you realize that 80 to 90%, you've got about 25 mutual funds here, but really you only have about 2 or 3. And that doesn't mean it's a bad thing. I just
There's a
don't
lot
think
of
you
overlap.
thought you
Yeah.
were well diversified,
Right.
and come to find out you're not diversified.
Right.
You see what I mean?
Yeah.
So let's figure out how much you want over here in the casino, if you will, if that's the way you want to look at it. But really, casino is more speculative. And I think you break that down to more investing intelligently and value stock and having a good mix in there is a whole different world. And but not only that, you got to think about your church money too.
Yeah.
That safe money. How do you maximize it? Is a CD going to do the job, or do you need to look elsewhere? Fixed indexed annuities a lot of people use because you get the upside of the market, none of the downside. But the thing is, you got to choose the right instruments there too. You might be in a whole bunch of stuff that really isn't designed to work. I'm just going to be quite honest. There's ones out there where you can put your funds in a different company that pays a whole lot more. So you got to have an experienced advisor that understands and researches that, and he's not just chasing a commission. You get what I mean?
Mm-hmm.
But that's really what it boils down to. But when you got to create that balance between risk money, especially when you're retiring, the risk in most cases has to go way down. And that's really what it boils down to. And I think that's what he's talking about. That casino is very attractive right now. But understand you can be knocked to your knees. You can be one card off. All of these things happen. Folks, retirement is like a casino church balance. And what my job is as an advisor is to make sure that you have the right balance. And sometimes the right balance is, I don't want anything to do with the casino. It's just not how I am. It's not how I'm built. A lot of people that inherit most of their savings for retirement from their family and hadn't saved a whole lot, they want more safety because they don't know it any other way. And they're already at retirement. Their parents pass away and then pass their retirement to them. It's a whole different world. So you just got to think, folks, it's literally like creating that balance between risk and reward. And how much risk are you willing to take? But you got to be safe. You got to be really safety focused and income focused when you get to retirement first, then your growth second. But what it boils down to is give us a call, 336-586-5861. Don't get caught up and think, am I doing this right? You want to walk away and know you're doing this right. 336-586-5861. No cost, no obligation. We'll sit down. We'll analyze exactly what you're in, what you're doing, give you that balance, and look at it and say, hey, look, if we go back through another 22, this is where your assets would have been at the end of the year. And if you're not comfortable how much shrinkage is there, then you better step up to the plate and make some changes. So we'll make you aware of changes that need to be made. It's up to you to make them. Once again, 336-586-5861, right here in Greensboro on Dolly Madison Road, right off of Friendly Avenue. When you walk away, you'll have a lot more knowledge about what it takes to make it in retirement.
Which is what you deserve. You've worked so hard, you've saved this money, and you deserve to have that information about the direction you're headed for your retirement. So give us a call right now. We've opened up 5 spots on the calendar, 336-586-5861. Call right now, reserve one of these 5 spots we've saved just for radio listeners today, 336-586-5861. Bryan, we've been using this gambling analogy. How often do you find you're talking with people when they come in for this initial review and they don't even realize how much quote unquote gambling they've got? They think that they've got this balanced portfolio. They think they've got the safety rails in place, but it turns out they're actually, 90% market invested, or the risk is just so much higher than they thought. Does that happen very often?
Try probably 80% of the time. There's way more risk than they thought they were taking.
Okay.
And then, and the reason it really gleams is because, hey, I'm retiring in 2 years or 3 years.
Right.
Well, I'm retiring in 6 months. How do I make this work? How do I safely make this work?
Yeah.
I don't mind a small portion of my assets having some risk, but I don't want too much risk in that small portion even as well. You know what I mean? Mm-hmm. If you're in the market, there's risk. And what the risk is of yourself, really. It's the psychological aspect.
Yeah.
It's when you jump out when things get a little rough. That's the worst thing you can do. You got to look for opportunity. You got to change your thinking when it comes to your managed money in the market. You want to look for opportunity. That's what you're supposed to be doing when things get ugly. If your balances are down, just because they're down, they're not out unless you take them out. You don't want to take them out. You want to rebalance in those environments.
Okay.
You want to make sure you're looking for opportunity. And a lot of people don't do that. Then when it comes to safe money, well, it speaks for itself. Things down a bit, you're not losing any of your principal. The next year, normally the market follows with a nice year after a bad year or bad 6 months. The market does. Since 1946, about 15 times, Heather, the market's gone into a bear market, 15, 16 times.
Okay.
But it came out of every single one of them. I mean, like we were just talking about, just think in 1980, the S&P was at a 141 and its low point was 102. Well, that's a big gap when you're talking 140. Today, it'll move up 100 points in a day.
Right.
But that was the total S&P market.
Right.
So people have got to understand it's all relative. So those numbers will grow. They will slip. You've just got to understand, as long as you accept that truth, your number one goal is not to jump. Your goal is, hey, what are we looking for? What kind of opportunities do you see?
Right.
And when it's good, make sure that we've had a nice run here. Should we come some of that off to the top and put it in church? You get what I mean? That's really what it boils down to. Folks, it's an art to this, and it's a never ending. You got to practice your art. Do they move our cheese around? Yes, they move the cheese around, but that presents opportunity too. When they move that cheese, in other words, just take RMDs. Used to be 70.5. A lot of you out there today still think 70.5. I got to take an RMD, my required minimum distribution off my IRA when I'm in retirement. Well, now it's 73 or 75, depending on when you were born. I mean, there's so much that gets moved around. Well, it's my job to look after those things and make you aware of it and plan accordingly. Folks, 336-586-5861. It's an easy number, 336-586-5861. Give us a call. Happy to sit down with you. No cost, no obligation. We'll look at your big picture and give you some areas that you probably ought to keep your eyes open on, your cheese getting moved around, but also give you some ideas on how to be successful in retirement. That's what we do here at Gaiser Finance Group. 336-586-5861. Give us a call, 336-586-5861.
Thanks for listening to the Wealth Through Wisdom podcast. To learn more, visit geiserfinancial.com. Bryan Gaiser is an investment advisor representative of Advisory Alpha LLC, an SEC-registered investment advisor. All opinions expressed by Bryan Gaiser are solely his own opinions and do not reflect the opinions of Advisory Alpha. This recording is for informational purposes only and should not be relied upon for investment decisions. Investment advisory and financial planning services offered through Advisory Alpha LLC, a registered investment advisor. Insurance, coaching, and educational services offered through Gaiser Financial Group. Gaiser Financial Group is a separate and unaffiliated entity of Advisory Alpha LLC. While tax and legal services may be discussed in the general course of financial and investment planning, Advisory Alpha does not provide tax or legal services. Please consult with your tax or legal professional prior to making decisions related to these issues. This material is not endorsed or approved by the Social Security Office or any other government agency. An annuity is a long-term financial product designed largely for asset accumulation and retirement needs. All guarantees are backed by the claims-paying ability of the issuing insurance company. All opinions expressed by externally cited sources are solely their own opinions and do not reflect the opinions of Advisory Alpha. This is for informational purposes only and should not be relied upon for investment decisions. The case studies presented reflects the specific circumstances of one client and should not be considered a guarantee that another client or potential client may experience the same or certain level of results. This is for informational purposes only and should not be construed as investment recommendations or solicitation. Names have been changed to protect the anonymity of clients and are not testimonials in nature.